go into detail about how to use order flow in order to enter and exit trades. Okay, how to use footprint charts, basically everything we learned with volume and bid ask profiles and delta and all these things. How are we actually going to use this information to help us enter trades? Okay, and so we are going to basically break this down. We're going to talk about delta, we're going to talk about open interest, we're going to talk about CVD. In the next few sessions, we're really going to be focusing on these things and showing exactly how we're going to use these things to enter into some good positions. Okay, now I would like to start out by saying that when people are first coming into this, it can be a little bit complicated looking at a chart like this and knowing how to read it. So my goal here is to break it down. So if you feel a little bit lost, just hang in there. I know you are going to get it. This template, the one I currently have on my screen, is available for you to import after you have purchased this course or if you are in the VIP Discord, okay? So I want to go over everything that we have on this chart, okay? First of all, up here, and I went over this a little bit in the beginning of the course, but I want to talk about specifically the things that we have down here, FPBS, okay, the footprint bar statistics. We have three different things down here, okay? We have CVD, which we will have a dedicated session on. We have volume, and then we have delta. Most of the time, these are the three things that people will have in their footprint bar statistics chart. And what this does is it breaks down every single individual candle and it gives you a bird's eye view. So for example, this purple candle right here, we can see that we had 2 million shorts open up right here, 1.8 million shorts open up right here. We had 869 longs open up right here at the price of 3,900. And this candle is breaking down at what exact tick did all these positions open, did all these contracts, I should say, open. Okay, the footprint bar is giving me everything in one, okay, showing me for this entire candle, there was 24 million volume and there was negative 6.1 million delta, which essentially means there were, out of this 24 million total volume, there were 6.1 million more shorts than there were longs, okay? And the reason why this is very nice is because over time, we can see things happening from a bird's eye view, meaning as the price is coming up here, we can see that all of a sudden, at this candle right here, we start to see many, many more shorts opening up than longs. Or we can see, for example, that in this candle right here, all of a sudden we have a massive injection of volume, right? Where we're trading an average of 8 to 12 million volume. And then all of a sudden volume really spikes up really high here. And we have 65 million volume coming in, meaning that a lot of trades are being opened up. And we can know that most of those trades are shorts, which is going to help us enter into a trade. We're going to get more into later exactly what trade you could have taken from this candle just by looking at these types of things. Okay, and then the CVD, we're going to spend an entire session on it, but basically it stands for cumulative volume delta, and we're going to get into that in another session. Okay, something else I want to just go over quickly is open interest. Right up here, if you click OI, open interest is basically showing you how many contracts are actually being opened and closed at a time. And then we have net longs and net shorts. This is basically showing you of the open interest, how many of those trades are longs and how many are shorts. For example, we can see right here for this candle, we can see that we had an increase in open interest. Okay, we went from 632 million contracts being opened to the close of this candle. We came up to 634 million contracts. And we can see that we had 2.5 million longs open and we had 4.5 million shorts close right here. Okay. So this is kind of what everything is, and now I'm going to get into delta and explaining how we can actually use this, okay? So what is delta? We've already gone over this, but delta is the difference between the market sellers and the market buyers at a given time frame, okay? So what we're doing is we're doing buys minus sells that equals our delta. So essentially, delta can tell us which side is more aggressive, the buyers and the sellers. Delta can be positive when buying outweighs the selling, and delta can be negative when selling outweighs the buying. And we've already gone over this in detail in some of the other sessions, but we can see right here for this candle, the delta is negative 6.1 million, which means there are 6.1 million more sells than buys. And because of that, the candle is purple, okay? This candle over here, on the contrary, we could see here we have 10 million positive delta, which means there's 10 million more longs than there are shorts, and this was a blue candle, okay? So when we are looking at the candles in a footprint chart, there are three basic views we can have. We've already gone over this. We have delta, we have bid ask, and we have volume. Okay, now these are three candles. They're the exact same candle, but over here on the left, this is just telling us the volume. Okay, so for example, at this red little tick right here, we have 8.4 million. This means 8.4 million contracts were opened up on whatever exchange we're looking at on the footprint chart for this given tick. The same exact candle right here is showing us a bid-ask profile where we can see 5 million sells and 2 million buys. Okay, and then over here, this is showing us delta, where we can see that there were 3 million more sells than there were buys, right? Because we're doing the buys minus the sells, that equals delta. 2.7 minus 5.7 equals negative 3 million delta. Okay, these candles are all the same, but the first one is volume, the second one is the bid-ask profile, and the third one is delta. Okay, so for the first candle, we just see how much volume was transacted, right? How much volume was transacted. In the second candle, we see buys versus sells. In the third candle, we see the delta. Okay, this is the difference between buyers and sellers. The red row, the red tick, is the point of control in the candle. Okay, so a few things here. First of all, when I am looking at a footprint chart, I prefer mostly to come over here and use delta cluster. Okay, better than the volume cluster, I like to use the delta cluster. And what this will do is this will show you, based on how darkly shaded something is, it will tell you where more volume was transacted. And the tick that is highlighted, for me, my point of control is green. Okay, some people use red. You can customize this to whatever color you want. This is the point of control. This is showing you where most of the volume was transacted. So if we zoom out here on these footprint charts, we can start to see where most of the volume was transacted. If we're really zoomed out, we can see those really dark areas. For example, right up here, we can see a lot of volume transacted right here. It can act as resistance if price comes back up to touch that level, especially if we have a point of control. We can see right here, we have a point of control, which means there was a lot of volume that was transacted right here at about 39,380, give or take. And we can also see in the top of this candle, we have a lot more volume that was transacted up here because of the darker shading. Now, remember, because this is a delta cluster, the difference between a volume cluster and a delta cluster, the volume cluster is just going to tell me how much volume was transacted based on the darkness of shading. The delta will tell me how much volume was traded, but it will tell me which side had more volume, the buys or the sells. If it's shaded darkly purple, that means the sells had a lot more volume there. If it's shaded darkly blue, that means the buys had a lot more volume there. Now, this is very important because if we see that we had a lot of volume and we had a lot of positive delta up here, it can help us know when to look for a trade in the opposite direction. And a great example would be this over here. So we know that up here we had a lot of longs open up because we see a lot of dark blue shading. Okay. Now, the next time we actually come up to touch this price, look at what happens. We actually reject off of it. Why? Because a lot of these people who tried to long the breakout, their trades were underwater. and finally they're at break even, and so they're closing their trades, and price moves down from here. Okay, so basically I prefer the delta cluster, and again we can see when there's a lot of dark shading here, it means a lot of volume in delta has been transacted there, and when price comes back up to it, it rejects. Okay, it rejects. Why? Because a lot of traders, well, a number of reasons. Right here, this is just a range, right? And so if we were in TradingView, in fact, let's go to TradingView real quick. If we're in TradingView, and let's say, for example, we know that we have a lot of volume right here, right up here. When we come up to that highest volume node, what happens? It acts as an area of resistance, and we reject right from it. In fact, this was a short trade that I took yesterday because of the fact that we came up to this high volume node, and we also did have bearish divergences as we came up to there. And so we can be looking at delta as an area of high volume just by looking at the chart. We can say, look, I see a lot of volume in this area, which means, you know, if we come back up to it, we're likely to get a rejection from it. Or we can see traders who tried to long the breakout up here and were immediately put underwater, probably closing their trades when we come out to this area. Okay, so we can see right here we have this mini range with lots of dark shaded delta slash volume. Price comes back up to here, boom, we reject from it. We can also do this with breakout traders. If somebody longs a breakout, for example, and it doesn't go the direction they intended, when price comes back to the same area where they opened their position, they'll probably close out and be, whew, that was a close one, right? At break even, and then price will come back down from that area, okay? Now we can tell that they were breakout traders, meaning they were longing the breakout, because when we come to the top of this candle right here, look at this giant wick. We can see in this giant wick right here, look at all the longs, all that positive delta that was trying to long the breakout of this, right? We have people longing way up into the wick of the candle. We have millions and millions of positive delta right here that are immediately trapped underwater. And so coming back to the original picture, right here, there's the candle, all these longs immediately trapped, and we'll get into that more later. When the price finally comes back to the area that they longed, they will close out their position, okay? So now we need to talk a little bit about open interest, because we talked about this a little bit in the previous session, but if we're looking at the breakout of a range, we want to see an increase in delta, we want to see an increase in open interest, we want to see an increase in volume, and we want to see an increase in imbalances, okay? And just as a refresher, imbalances are these areas. If we have the bid-ask profile, I prefer to have the bid-ask profile and the imbalance text. And imbalances are where we have these dark squares around the number, which is telling us that there are way more sells, for example, than there are buys right here. Or on the other hand, if it's around the ask, then it's telling us there's a lot more buys than there are sells, okay? You can go back and review the last session if you are interested in more of reading more or learning more about that. But basically, we now need to talk about how to use delta and open interest together to determine if we are actually going to break out, or how we are actually going to identify a good trade setup, okay? So let's talk a little bit about open interest. Open interest is the total number of outstanding derivative contracts, options or futures, this is the technical term for it, right, that have not been settled, okay? However many contracts that have not been settled. In normal English, this means how many trades are open. How many trades are open? All right, if I go ahead and hit market buy, however many contracts I put on that trade, open interest is going to go up by that much. If I open a trade that has 1 million contracts on it, open interest will go up by 1 million. If I close that trade, okay, open interest will go down by 1 million. For more technical language, if a buyer and a seller come together, Okay, and they initiate a new position of one contract. Open interest will increase by one contract. If the buyer and the seller both exit, then a one contract position on a trade, then open interest decreases by one contract. However, if a buyer or a seller passes off their current position to a new buyer or seller, then open interest remains the same. So if I close along, but somebody else opens along for one contract, open interest will stay the same. So one thing to keep in mind about open interest is it's important to note that open interest equals the total number of contracts, not the total of each transaction by every buyer and seller. Okay, in other words, open interest is the total of all the buys or all the sells, not both. Okay, this is important. It's the total number of all the buys or all the sells. Okay, it's not both. So here's how we're actually going to interpret open interest. Now, if we come over to our chart here, open interest is going to be up here where it says OI. Okay, where it says OI. And right here, we can see that if we zoom out especially, we can really get a good view of what open interest is doing. When these candles are getting higher over time, when open interest is increasing over time, that means more and more trades are opening. And when open interest is decreasing, that means trades are closing. Okay, now this is a 30-minute chart. We can see, for example, right down here, that during this 30-minute candle that we got right here, lots of trades closed. Okay, lots and lots of trades closed out. And we can see during this candle right here, many trades opened. Okay, we went from 644 million trades open to 667. Okay, so 20 million trades open, and in this candle we went from 660 million down to about 619. So about 50 million trades closed in this candle, and this can tell us a lot about a trend, whether or not it's a healthy trend, whether or not we can expect a reaction, and we're going to get into that more. But we need to talk a little bit about net longs and net shorts, because net longs and net shorts are basically going to be breaking down open interest into exactly what types of trades are opening and closing. So, for example, we can see right here, right, that on this purple candle, and let's zoom in a little bit so that we can see it more clearly. Okay. During this purple candle that we had right here, we can see open interest decreased a lot, and we can see that a lot of longs actually closed out of their positions. 36 million close out of their positions, and we can even see that some shorts close out of their positions. There was a lot of people closing out trades. Okay, there was like some indecision in the market here. People didn't know whether we were coming or going, so they're just closing out tons of trades. However, right here, we can see a massive increase in open interest, and we can see massive amounts of shorts opening here. Right, we see many shorts are opening in this candle, and not too many longs are opening. And then in this next candle right here, open interest kind of stays the same, as longs are totally closing out of their positions, probably because they're getting stopped out in this purple candle, and more shorts are opening. Okay, more and more shorts are opening. And we're going to be talking about how we can actually interpret this data to enter into trades. But in general, this table right here helps us to know what the market is doing. So if price is going up and volume is increasing and open interest is increasing, that is a bullish market. Okay, and so the way we're going to be looking at this is basically, if we see on our footprint bar statistics, if we see, let's turn off net longs and net shorts. Okay, and let's find ourselves a nice trend. We've been really ranging. We've been ranging for a long time. So let's try and find that downtrend that we were really in for a long time here. Okay. Well, we need to find an uptrend. Here we are. In this this uptrend that we got on February 28th, we can see that as we begin this uptrend, we can see that over time, open interest is getting higher. Okay, we can also see that volume itself is increasing over time, right? We start off with very high volume, and then we have like around 40 volume, and then we have around 50. The volume continues to get up, come high in these candles, and open interest is still increasing as we are making our way up the uptrend, okay? Until something happens, which is we have a massive decrease in open interest, and then you can see we start to range for a while until we eventually break down, okay? So if we see open interest is coming up, if we see volume is getting higher, and we see price is going up, that means we are in a strong uptrend, and that is a bullish market condition. If we see that price is getting lower, and volume is increasing, and open interest is increasing, that means we're in a strong downtrend, and this is bearish. Okay, so basically the opposite of what we just saw. If we see that the price is getting higher, like it is right here, and literally from this bottom here, we can see a very clear increase in open interest over time, right? Open interest starts at 636 million, and over the course of the uptrend, it continues to get higher over time, coming all the way up to 688 million. So basically 50 million, we have an increase in open interest of 50 million during the course of this uptrend. And then we can see also that during the course of, let's see, this is tough because we've been ranging for so long here, but let's see if we can find another really strong downtrend. I'm going to go to a lower time frame here. I'm going to go to a lower time frame. Right here is a pretty good example of it, okay? Where we can see that price is getting lower, lower lows, lower highs, yet open interest is increasing over time. This is showing us that we're in a pretty strong downtrend. Okay, now this is not something that you would use to actually take a trade specifically. This is just helping you to identify your market conditions. Okay, this is just helping you to identify your market conditions. And let me turn some of these things off for us right here. Yeah, now if you see that price is coming up, but volume and open interest are decreasing, this is bearish. This is bearish. We're going to go into some examples of this. I've actually taken some screenshots so that we don't have to go back and look. But man, I don't know if I'll be able to find it now, but a few days ago, actually, no, it was yesterday. It was yesterday. Okay, yeah, here it is. Here it is. So yesterday on the live stream, we did take a long from down here on the VIP live stream because we had millions of shorts trapped down here, like millions of trap shorts down in this candle here. And we're going to get into exactly what that means later, but look at this, okay? As we are coming up now to the VWAP, right? We can see that open interest is getting much lower, and if we go even to a lower time frame now, like, because that's a 15-minute candle, if we come back to that same area here, we rejected off that VWAP. We can see that as we're coming up here, we see a massive decrease in open interest. Okay, a massive decrease in open interest. And we can even see that volume, although we still have a spike in volume here, it's nowhere near as big as it was before. And so, you know, we could say that because the open interest is coming down, this is a weak move to the upside. And likewise, when we have price coming down and we see open interest decreasing and volume decreasing, that means it's a weak move to the downside. Okay, so coming back to our chart right here, when we see price going up, but we see volume and open interest going down, that is bearish. Okay, this is a weak downtrend. When we see price coming down and we see volume coming down and we see open interest coming down, this means it's a weak bullish uptrend. Okay, it's a weak bullish uptrend. So another way to think of it, because we're literally watching what's happening right here, if you see prices moving up, okay, for example, right here to our VWAP, you see to yourself, oh wow, price is really moving up. I wonder what's going on here. Well, we don't see a lot of new longs coming in to push price higher. If this was a healthy uptrend, we would want to see a lot of buying activity. We would want to see sellers coming in, giving us some volume to push the price up above this VWAP right here, right? But instead, what do we see? We see the prices mostly going up because shorts are closing their positions, okay? Probably people who shorted the bottom, right down here, are getting stopped out. And that's why price is coming up, right? Because closing out your short is basically a market long, right? We see that there's not very many new longs actually opening up right here. We see there's very, very few, okay? And we can tell, again, the open interest is broken down into net shorts and net longs. When the candle's gray, this is telling us that positions are closing. When the candle's blue, this is telling us that positions are opening. We can see on this move to the upside, very, very few longs are opening, and many, many millions of shorts are closing. We can see that open interest is coming down, meaning there are not new trades being opened up. There are trades closing, telling us this is a weak move. There's not a lot of volume behind this move. There's not a lot of sellers coming in who are going to push this to the upside, okay? So that's a very weak move to the upside, which is why, even though price is rising, yet open interest and volume are decreasing. That is a bearish trend. On the contrary, right, if we see an uptrend, such as the one that we saw back on February 28th, where we had that massive move to the upside, let me go back to it. We can see that the open interest was increasing quite rapidly, showing us that there was conviction and there were people putting their money on the line to push the price upwards, right? That's how we want to think of it. We can tell exactly why price is moving in a certain direction. And if we can see that millions and millions of long dollars are pouring into the market, that's giving us confirmation that the price is going to continue upwards because there's actual money coming in to move the price up, and it's not just shorts closing out of their positions. And I'm sorry this is taking me so long. I'm trying to work on just keep talking. Just keep talking, Jason. Just keep talking while you're looking for your thing. Okay? So look at this here. Okay? This is the uptrend from February 28th. Look at the open interest coming higher and higher and higher over time, right? Higher and higher over time. And we could see that it's a very, very clear uptrend. As the price is getting higher, right? Let's take a look at some of these candles here. At first, open interest is coming down, right? At first, it's coming down, so we might think to ourselves, okay, this is a weak move. This is just a short squeeze. A whole bunch of people who shorted the bottom are now closing out of their short trades, and not too many longs are opening up at all. But then, look at this. Then we start to see an increase of open interest, an increase of longs coming into the market. We see 3.1 million longs, 4 million longs, 5 million longs. Then we start to see like 19 million longs opening up, 34 million longs opening up as open interest still continues to get higher and higher over time. This is telling us that this is a very strong uptrend and that, you know, there is money coming into the market. Even after this massive blue candle, where we see a lot of shorts, people who tried to short this level are getting stopped out. Immediately, open interest comes back up, showing us that even though a lot of shorts got stopped out here, which is why the open interest came down so much, immediately there were 40 million longs stepping into the market saying, I am willing to buy Bitcoin at this price right now, and I am going to put $40 million. In 5 minutes, long into this candle, okay? And this is telling us this is a strong uptrend. There is money behind this uptrend, okay? Then we can see, as we start to come up again, we can see open interest is coming down. And once open interest starts to flatten out here, this is where we will range, okay? And the opposite is true for a downtrend. So in a downtrend, what we want to see is we want to see a sharp increase in open interest over time. So let's come back to the way down. Sorry guys, this is a 5-minute chart, so you know it's going to take me some time. Okay, here we go. Look at this downtrend right here, guys. We can see that as the price is making its way down over time right here, open interest is increasing. Let me get back to. Oh man, I'm flopping and groping here, guys, with the XO charts. But I think you get the idea that if we are in a trend and open interest is increasing, that means it's a strong trend. If we're in a trend and open interest is decreasing, that means it is a weak trend. Now let's talk about well, basically these 4 points, okay? Just to summarize, a rise in open interest with price and volume means new longs are entering the market. This is a healthy uptrend. Yeah, we just went over this. If open interest is increasing and price is declining, it means new shorts are opening, and that's a strong bearish downtrend. If open interest is decreasing while price is rising, that means it's a weak uptrend. And if open interest is decreasing while price is falling, that means it's a weak downtrend. Okay, net longs and net shorts. Net longs means new longs are opening. Net shorts means new shorts are opening. When you see a move to the upside, you want to see the net longs increasing together with open interest and delta. And if you see a move to the downside, in order for that move to be substantiated, you want to see net shorts opening up, and you want to see an increase in open interest for that to be a strong move to the downside, okay? And so this is great for identifying fake outs, right? If you see prices coming up to a level, for example, right here, okay? This is actually a great example of a fake out. We recently got a fake out for Bitcoin. I actually did take a short from here. And the reason why I took a short from up here was, well, many reasons. You know, we had 12-minute divergence, money flow, and momentum on market cipher B. The RSI is being very over bought. But we had this level of resistance right here, and Bitcoin was pumping out, right? It was pumping out. Okay, a lot of people longed this breakout right here. Now, those of us who are more experienced traders would never long this breakout. But if we take a look at the order flow, what was happening as Bitcoin was pumping up to that level? What was happening? Open interest was decreasing, okay? Literally this entire move to the upside, we see open interest decreasing. People are closing out of their positions, okay? People are closing out of their positions. Now, what we want to talk about now is using delta and open interest together to determine if we are going to reject from a level or potentially bounce from a level. And I want to go back and take a look at some instances that have happened recently in the past. Okay, so I want to start with this. Okay, using delta and open interest to enter a trade. This is a long trade that I took recently. In fact, this was the one that we took yesterday on the VIP live stream. Okay, yesterday on the VIP live stream. This is how we are going to be able to identify traders who are trapped in a position so that we can trade in the opposite direction, okay? When you see a lot of delta, a lot of imbalances, a lot of open interest coming down to one direction with a massive increase in volume, and yet price doesn't really keep going in that direction, this is now giving us the opportunity to enter into a long trade. And this specific type of trade was a chickens drinking water type of trade. Okay, so I'm going to close off all these levels I have on my chart here, and we're going to talk about how we would have entered long based upon the order flow. So let's go to a 1 hour chart and let's take a look at the trade that we entered. Now, this was pretty much a swing failure pattern, okay? A chickens drinking water type trade where we had the previous low right here, okay? We had the previous low right here, and we had price coming down below this level, okay? And basically what we were waiting for, the exact setup that we gave was, I was looking to see that price was going to come back up above this level, and then the exact long position that I gave in the video, the live stream, was this, okay? Basically, stop loss below that last low and targeting the top of the range. Which, are we going to get there? I don't know. Okay, I don't know. Obviously, we've hit take profits. I've taken profit 1 from this trade earlier this morning around this area here. But basically, let's take a look at what was happening on the order flow and why we would have gotten into this trade. Now, first of all, I do enjoy very much so using Market Cipher. So first of all, the context of all this order flow stuff is that price has made a lower low and momentum on Market Cipher B has made a higher low. And even from back here, we can see price making lower lows consistently. And on the 12-minute time frame, we see also momentum consistently making higher lows. So we can tell right away that this is a very nice area to potentially look for a chickens drinking water trade, right? We had very strong support down here. It was a weekly level. If we turn on our levels on the chart right here, we can see that it was a weekly and a daily level right here. And then we came down and we lost that level. Now, let's take a look at order flow. What was happening here as we came down to that level, okay? Look at this. On the way down, we had open interest increasing, okay? This means new people are opening up their positions. And if we go to the actual chart, okay, and we will go back to that exact place. The exact place. Where was that? It was right here. It was right here. Okay, we can see a downtrend. Not only that, we see a very strong downtrend. We see a very strong downtrend, meaning we can see open interest is increasing. If we turn on our net longs and our net shorts, we can see that millions and millions of shorts are opening up as we come to this area and take out that previous low. Okay, this is telling us that this is a very strong downtrend. Now, we have to remember something, that the order flow is only going to show us market orders. It's not going to show us any limit orders. Okay, and so when we see bullish divergences forming on Market Cipher B, we have to be aware about something called absorption. And we're going to get more into this in CVD. But what absorption is you have to think of it as people are entering into short positions, millions and millions of shorts. We see 100 million volume, a huge spike in volume here. Okay, many people are opening trades. We have 33 million shorts opening up, 38 million shorts opening up. And we can see negative 37 million delta, which means we have 37 million more shorts than there are longs, okay, which basically means there's about 60 million shorts here and about 40 million longs out of that total 100 million volume, okay? Now, this means that there are 60 million shorts right here in this candle, okay? Which means if we come back up above this candle to about 37.7, 60 million shorts will be in the red. Coming back to the Bitcoin chart now, that means that if we come back above this level right here, which we did, the 60 million shorts that are right here will be trapped, okay? Which means they either have two options. Either they have to hold their trade in the red, or they have to close out their trade. If they close out their trade, it will push the price up. And now what we can do is we can use the footprint chart to decide whether or not we're going to enter a trade. Now, absorption is basically when you see heavy, aggressive shorting in a certain direction, like you see right here, yet price doesn't really move that much lower. I mean, look at this. We literally have 60 million shorts on this candle, and price is like, just chilling out here. This is telling us that there are bigger players in the market that are absorbing those orders. Now remember, the footprint chart is only showing us market orders. It's not showing us limit orders, because here's why. A market order is immediately filled. Okay, if I place a market order, immediately my trade is filled. If I place a limit order, okay, let's say that I have a limit order right here. This is just, I'm using visuals. This is a limit order. And basically I'm saying, hey, I'm willing to buy some Bitcoin. I'm willing to buy some Bitcoin. Is anybody willing to sell me any Bitcoin? This limit order is not going to get filled unless somebody places a market sell order and fills my limit. So if there is a massive limit order, let's say that there's a limit order down here for somebody's trying to buy, let's say 100 million Bitcoin, okay? 100 million Bitcoin. They need sellers in order to fill this limit order, right? They need sellers in order to fill this limit order. And so what's happening right here is these are showing us all these market sellers, and all these market sellers are basically filling massive limit orders. That's why the price is not coming down, even though we see open interest increasing, even though we see millions of shorts opening up. Price is not really coming down right here, because we can hypothesize that there are limit orders absorbing all these shorts. Okay, so we have somebody with a $100 million limit long right here, and let's say we have 60 million shorts, which we do. We have 60 million people shorting down here with their market shorts. And so we have 1, 2, 3, 4, 5, 6. Each one of these market shorts, each blue market short, let's say, is worth about. Is there any way to change my text color here? I don't know. Is worth 10 million each. Okay. Basically, what's happening here is this limit order is basically being filled each time somebody's market shorting down into the support. Once this limit order is filled, okay, price is going to now move in the opposite direction, because there will be more buyers than sellers, because once this limit order is filled, it becomes an open order in the market, right? Once the limit order gets filled, this becomes an active order in the market. So what's happening here is we can see people are shorting into the support, which is the chickens drinking water, and we immediately see price start to move in the opposite direction, okay, in the opposite direction. Now, when you see something like this happen, you don't FOMO into a trade right away. Instead, what you do is you wait and you tell yourself, okay, I know that there are 60 million shorts trapped that will be trapped if the price comes back above this level, okay? And so if the price comes back above this level, I will entertain entering a long position like this, okay? And you would have to set your take profits accordingly. Stop loss below that last swing low. And what would be our confirmation to enter? Once we see that price has come back up above that level, which happens right here at the top of this candle, we know for certain that all these shorts are trapped. Now, notice what else is happening simultaneously. Even still, we have an increase in open interest here, which is showing us that, yes, lots of longs now are coming into the market, okay? Now these shorts are definitely trapped down in this area, okay? And lots of longs have entered into the market. And this is literally where we get our move to the upside. Yes, of course, we come up to the VWAP, and a lot of shorts are now closing out. But then we continue to move up from there, okay? And it's been not the strongest move in the world. To be fair, it's really not been the most strongest move in the world. we had a pretty big decrease in open interest right here, which is now showing me that this is probably not the strongest uptrend in the world, right? This is probably not the strongest uptrend in the world, which is probably why we haven't seen much follow through after entering into this long position yet. But the point is, we still were able to identify the fact that we had lots of shorts coming into the market right here. They were immediately being trapped. And then we also see on Market Cipher B bullish divergence. Okay, even if you're using a regular RSI, relative strength index, we can also see here that are we getting bullish divergence on the RSI? No, we're not really. Not really. Slight bullish div on the RSI, but Market Cipher is very clear. The 12-minute Market Cipher is very, very nice for showing you divergences, and we can even see the money flow coming up here. Okay, literally the money flow is coming up on the 12-minute time frame, and when you see that, for me, you know, this is really the a tall tale sign for me that everything is pointing to the fact that we're going to get a move up from here, from this point, right? Everything is pointing to that fact. Money flow is coming up over time, both on the red side and on the green side. Bullish divergences on the order flow, millions and millions of trapped shorts, okay? The more trades that can be trapped, the better. And what we really want to see is a large spike in volume. You're not just looking for trades being trapped arbitrarily here. What you're looking for is a massive spike in volume. You want to see something abnormal, okay? When we even come up to touch the VWAP, okay, we do see a massive spike in volume with longs being trapped at the VWAP, and then we get a move to the downside, right? We see the exact opposite of what we saw. 61 million volume. We see a decrease in open interest, showing us that this is a weak uptrend. And immediately we get a rejection. Immediately we have all these longs that are trapped up here. 4 million longs, 2 million longs, 1 million longs, 2 million, 4 million, 3 million, 2 million, 4 million. And we get a move to the downside, right? Which could have made for a very nice scalp trade if you were watching this happen on a lower time frame. Okay, so that is one way to enter a trade where you see a massive increase in open interest, a massive increase in volume, very much high delta in a certain direction without any follow through, and actually price comes back in the opposite direction, showing us that there's been absorption of all these shorts, and now we have trap traders and we can trade in the opposite direction. Only do this, guys, with a level of support or resistance, okay? In this case, we had a chickens drinking water trade set up on the 1 hour time frame. On the 1 hour time frame, we had a very, very clear candle comes below and closes above with bullish divergence. I mean, I guess more so we could say we had that on the 2 hour time frame. But we for sure had that on the 4 hour time frame, without a shadow of a doubt. But it was a more slow, drawn out kind of chickens drinking water swing failure right here. But yeah, we did come down, took out this low, trapped a whole bunch of shorts, and then came to the upside. So let's talk about now some other instances of trades, okay? That this was a trap trader's setup, right? Where basically we had all these shorts being trapped. Once price came above that level, we see millions of trap shorts. Then we see positive delta, increase in open interest, trap shorts, price moves to the upside. Then this one right here, actually this is what I was talking about. Now we have this second type of trade right here. Yeah, I guess I'm missing a graphic from my chart here. That's okay, because I'll go over this anyway. We don't need the pictures. But here's another instance of a decrease of open interest at support or resistance, a sign of a weak trend. The level is likely to have a reaction. I actually just went through this one as well. This is the rejection off the VWAP after we got the long trade. then we could have immediately gotten into a short trade. If we go down to a lower time frame like the 5-minute, let's actually take a look at what was happening there. And then we'll take a look at one more trade that I actually just took before making this video, and it was a short trade, and we'll discuss how I was able to get into that based on the order flow. And of course, Boyan will be also doing some sessions with me as well, so we have that to look forward to. But we can see right here that after we get our bounce and after we trap our shorts, now we start to see a massive decrease in open interest as we come up to this resistance, which is the VWAP, showing us that this uptrend is pretty weak right now. And as soon as we come up here, what happens? This is on the 5-minute chart. Look at the millions of longs that we have up here. Millions of them, right? 3 million, 2 million, 2 million, 3 million, 2 million, 3 million, 2 million, 3 million. Immediately after this candle closes, those shorts are trapped, right? And now we can say, okay, I will enter a short here because we basically had the exact opposite. We have a massive increase in volume with a whole bunch of shorts closing out. Basically, this move to the upside is not because buyers are coming in, it's because shorts are closing out. And then we come up to the resistance. We see that these are trapped longs, and we come back down. That is another instance of a way to get into a trade right there. And I want to talk about the short that I actually just took from up here, because this one was a little bit different, okay? This one right here, we can see that we had come up to a very important level, which was basically just the high of this range, right? We've literally been kind of trading in this kind of range here in general, and we came up to the high. Now, let's take a look at what was happening with the order flow as we came up to that high. Now, again, for me, I always like to look at Market Cipher because Market Cipher gives me very, very accurate signals that help me make decisions, especially when I'm looking at order flow. Now, everybody uses different tools to trade, but for me, I love to look at Market Cipher on the 12-minute time frame. If I see that price is coming to an area of resistance, and I see that the momentum waves are getting lower over time, and I see that the money flow is also getting lower over time, for me, I am 100% looking for a short trade. Okay, so let's come over to the order flow and see what was happening as we were coming up to this area of resistance. Okay, now notice a few things. First of all, open interest. What is happening as we are making this pump to the upside? Open interest is coming down. This is telling us that people are not really interested in pushing the price higher, right? If this was going to be a real breakout, we would see an increase of open interest, okay? And we would also see stacked long imbalances, right? We would see stacked long imbalances at the tops of these candles, okay? Now look at what's happening here. As we're coming up, we can tell that mostly these are shorts that are closing out of their positions, right? People who shorted probably up here, even people who maybe even shorted up here, okay, thinking that we were going to reject again from the VWAP, right? A lot of people probably thought we were going to reject from the VWAP. We can see shorts are closing as we're coming above the VWAP. And open interest is coming down. We don't see a lot of new longs opening up at all. In fact, we see longs actually starting to close out as well as shorts. And so what is powering this movement to the upside? Not anything substantial, right? Not anything substantial. We always have to ask ourselves when we're looking at order flow, what is causing this move to happen? Because if we can identify the cause of the move, then it will help us make a decision on how we're going to trade it, if we are even going to trade it, okay? And then look at this candle right here, 5.3 million positive delta, okay? And immediately after that, we have a candle 6.1 negative delta million, okay? Negative 6.1 million delta. As soon as price comes back down below this candle, we now know that we have millions of longs that are trapped up above this level right here, okay? Millions of longs that are trapped up above that level. And so what we know is once price comes back down to here, we have millions of longs trapped, and so we can now enter the short position from the resistance with our stop loss above that last swing high, and we would obviously set our take profits down to the low of the range that we're trading here. And you know, I would like to use this volume profile to, you know, obviously the value area low is where we would really kind of want to trade this to. And take profit 1 would be at the point of control. And you can see that we did come down and bounce perfectly off that point of control, and then we lost the point of control. And if we're going to continue down, then it's very probable that we do something like this. We'll have to kind of see what happens here, right? And so that is what we're going to be looking for. We're going to be looking for identifying whether or not that move is strong, whether or not that move is weak, and then making our decision based on, do we see traders trapped in that area? Okay, so this is how we're going to use open interest and delta together to enter into trades. And this can be done on lower time frames. This can be done on higher time frames. It doesn't really matter. But I always like to do this at areas of support and resistance. Okay, areas of support and resistance. Okay, we can see right now, for example, that, you know, in the last 15-minute candle, the last two 15-minute candles, we see open interest is increasing, we see shorts are closing, we see longs are opening. This is actually a sign of strength coming above the VWAP with an increase of open interest, an increase of longs, and we can also see, you know, now we have some positive delta. Now, this is nothing that I would take a trade off of. I'm just observing the current market conditions right now, okay? Now, interesting to see that this downtrend also was very, very weak. This downtrend mostly for the past 45 minutes has just been shorts, longs closing out of their positions, right? Hasn't really been powered by many shorts opening up, right? We see open interest coming down. So these are things maybe like intraday scalp trades. The juiciest trades are always going to be when you have an anomaly, some kind of crazy amount of volume coming in where you see lots of absorption happening, okay? And so that is basically how we're going to be using order flow and how we're going to be using delta and open interest in order to enter trades, okay? So I hope you found this session helpful, and I will see y'all in the next session where we will be discussing CVD and CVD divergences, because CVD divergences combined with what I'm showing you here is a very, very powerful tool. And I'll see y'all in the next session.